Welcome to Market Movers, where we identify market-moving headlines and discuss ways to either hedge risk or create exposure in affected assets. We have Scott Martin.
Hi, Jim.
So, Scott, obviously a big headline week, like it is every week. We had Powell discussing negative rates, saying he didn't want them. We had reopening of several states and data coming in from that, and we have $3 trillion more of stimulus that's been proposed. $3 trillion. Thoughts on what's the biggest headline?
All three, Jim, given that we're talking about $3 trillion, I really do think it's everything you mentioned. But right now, at least for today, sitting here on May 13th, it's Powell. It's the Fed providing liquidity. It's been the help from the Treasury Department that this market has traded on, I believe, a lot in the last several weeks. And given that the Fed Chairman Powell had come out this morning and talked maybe a little less dovishly or less supportively, let's say, than it had before, I believe is why the market took some of that news so negatively.
Now let's break it down to different assets. Two of those headlines should have greatly affected the dollar to the negative side. They haven't. Why?
Well, the funny thing about the dollar and, frankly, the metals, Jim, is they're kind of safe haven panic trades in the sense of when the markets feel uneasy, they flow to asset classes like the currencies, especially the dollar and the metals. And so that's why when we've seen this environment so far year to date with volatility so high, with headlines so fast and furious, you've seen the dollar and gold kind of hold their value. And I believe as the market continues to maybe see these market moving headlines, some of this volatility tick up from here, that's why the dollar and gold can continue to go up together.
Okay, CME not only has dollar index contract, but they also have extremely liquid contract and have been for many years in euro, yen, Swiss franc, sterling, and a couple other currencies as well. They trade in the regular contract, they have a micro contract, and they have liquid option markets that trade Mondays, Wednesdays, weeklies, monthlies, and quarterlies. To the NASDAQ. The NASDAQ has been pulling the wagon, particularly these five names that we keep hearing over and over again. It makes a little bit of sense. I understand the technology is more important in these times. Will it continue? And is it worth it's almost at all-time highs. Does that blow you away?
It does to some degree, but it makes some sense. The five names you talked about are those very popular FANG names that many of us use in our daily lives or we touch daily via some of our activities, which is my point about the NASDAQ, Jim, and the NQs, which we've talked about on Market Movers many times. The NASDAQ is very strong. It has very strong companies in it with a lot of revenue power and a lot of profit growth. So in my opinion, the NASDAQ can continue to be strong here while maybe some of the other indexes that one follows, which could be the Dow or the Russell, remain weak because the companies within those two indexes are not as strong as what's in the NASDAQ NQs.
The CME has the four most popular and heavily traded equity index products, which are the NASDAQ, the S&P, the Russell, and the Dow. They have Monday, Wednesday, Friday weekly options. They have monthlies, and they have quarterly options that are all liquid. Also, they have the regular contract and the micros. Is there opportunity for pairs between them if you have a view on NASDAQ compared to the Russell?
There may be. I believe the NASDAQ is the one index that I would own in times like these. So if you're looking for a pair trade against one of the other indexes, you could definitely hedge it out versus, say, the ES or the Russells. Absolutely.
Still, it seems like the overnight trade is a little less volatile than it was at the beginning of the crisis. Do you still plug in every night?
Every night, Jim, because these times, as far as what we saw in February or March, are coming back at some point. So we have to be ready for them, and that's via the futures market overnight.
You know what just blows me away? A sophisticated trader said to me the other day, we were talking, I said I had covered something and said like at 8 o'clock at night, he's like, wow, how did you do that with markets closed? And I was like, oh, man, the futures markets are almost never closed. I was blown away by still how people don't look to the futures market for liquidity in off hours. It's amazing to me. Thank you for joining us on Market Movers, where we are helping to make you a better trader.